Hi, everybody. Welcome. This is Hello Tomorrow's Venturing in Asia Pacific, Accessing New Markets and Funding. Today, quick introduction, I'm Sin. Today, I have with me four great panelists that I'm really excited to speak with. But maybe just really quickly, as a quick introduction to the organization as well, so that we're not entirely unfamiliar with each other. So we're Hello Tomorrow. We've always existed to unlock the power of deep tech to solve our toughest global challenges. So today you'll note that a lot of the narrative would be around more hard tech type solutions. We've always believed that a lot of the hardest challenges that we face have to be, unfortunately, solved with hard technologies, hard solutions, and that takes building. So that's what we're all about. We exist to help accelerate the time as well as reduce the amount of resources necessary to get a lot of these otherwise research-based technologies to scale. So just a quick roundup of what we do as an organization. At the heart of it, we're ecosystem builders. We started in 2011 in Paris as a bunch of scientists, entrepreneurs, and we're for a long time also largely volunteer organization. So we built collaborative ecosystems. We scout deep tech solutions across the world. We run the world's largest early stage deep tech startup competition, the Hello Tomorrow Global Challenge, which this year is in its 9th iteration. I'll share a little bit more about it in just a moment. Moving on, we also provide innovation consulting and services. We work with corporates, governments, NGOs to support them, again, around innovation, open innovation. Moving on, we also produce a relatively large amount of research and insights. We also host events and dialogues. We have the privilege of also being able to ask some more controversial questions and tease out some uncomfortable answers, because that's kind of what we do. Lastly, we do also host bespoke startup programs, actually, of all sorts. So everything from incubation, acceleration, through to market access, co-innovation, all that jazz. So this gives a snapshot of our organization at large. We have a community of about 500 investors globally, partnered with all of our renowned universities, incubators, and accelerators, counting at about 150. I'm guessing that's a little bit less than I have in my head. But we also keep a repository of about 7,500 deep tech startups globally. Those would be our deep tech pioneers, our creme de la creme, if you will. We also have a network of about 5,000 corporates globally. When we talk about deep technologies, I know it gets a little bit confusing, but the icons on the bottom left, everything from medical devices through to biopharma, through to environment, aerospace, food and ag, infrastructure. We cover the whole gamut. So we don't have any particular inclinations or preferences. We support all of the startups across the whole spectrum. So in terms of really brief numbers, we've evaluated over the years more than 30,000 early stage solutions that come through our pipeline. We've supported more than 50 global clients in their innovation journeys. We've also distributed more than $1 million rather, in cash prizes. Our prizes have always been non-dilutive funding. And we also help support we've also helped support our startups get access to funding, and we're very glad that our top 300 startups alone have already come to raise more than 2 billion euros to date. So really quickly, this also is a bit of an overview of our past winners from our global challenge. I won't talk about all of them. Some of them have already seen their exits. You'll see some of them in the news recently, for example, such as Onward, that's helped paralyzed patients to walk again. And then most recently, I know we're headquartered in Paris, but I promise we have no preferential treatment. Having done this for 8 years, this was our very first French winner. Switch Energy, they do osmotic power. Today we're talking about Asia Pacific, right? We also have an APAC challenge that operates a bit as a subset of the global challenge. So the perks of being a startup that's based anywhere in Asia Pacific also means that you double dip. There's the APAC challenge, and then winners get fast tracked to the global challenge finals. How great is that? So this is again, a bit of a view of our recent winners ever since we started doing this in 2018. So as an organization, one of the things we've always championed would always have been, how do we help startups and industry collaborate a lot more closely? It's absolutely necessary, especially for deep tech companies, to gain access to industry, because it's very difficult otherwise for them to have enough context and understand and appreciate the nuances around what it'll take to solve problems, and especially industrial problems, well, and to be able to scale within those settings. So this is just a quick overview of just 3 of the competitions that we hosted in the last quarter of 2022. We do quite a lot of these every year. So just thought I would take this opportunity to share ongoing opportunities. If you're a startup, we have 3 challenges currently ongoing. From left to right, Oppo's running their Inspiration Challenge right now. It's going to be closing next week, so do partake soon. They're looking at digital health, accessible technologies, as well as environment solutions. So if you're interested in any of these in any of these challenges, the QR code is here for you to scan. Our Hello Tomorrow APAC Challenge is also currently ongoing. Applications close 24th of July, so please give that a shot. Lastly, we also have the NTU Sustainability Challenge. There's a lot more information on the web pages, so I won't go into detail about that. So I mentioned earlier on the Hello Tomorrow APAC Challenge. For the first time this year, we're going to be hosting an Investor Day in Singapore. We've always hosted this in Paris alongside our global summit, but APAC needs some loving, right? We have a really vibrant ecosystem here, and we're really looking forward to showcasing that. So for applicants and finalists for this year's APAC Challenge, they're going to be getting free access to our Investor Day here, as well as pitch at our APAC Summit. They also get fast track opportunities to Slingshot, and then fast track opportunities to the Global Challenge Finals. So just really briefly, this is our Investor Day that'll be taking place in Singapore on the 4th of October. It's going to be a really exclusive event, so we're keeping it very close door and very curated. So these are the industries that we're looking at. Again, we're agnostic. We're industry and technology agnostic. So this is from our pre-registrations so far. These are the profiles of startups that we're seeing come through the pipeline. And as for funding stages, about most of them would be primarily early stage, pretty good fun. And just thought I would mention, our previous Global Investor Day that was concluded just in March recently. 204 investors, 282 startups. Yes, I know APEC's looking a little bit small. That's the whole idea. Going to be very high quality conversations, full day of one-to-one meetings. And we're also going to wrap up with VIP cocktails. It'll be Investor Days, investors as well as LPs that will be invited, as well as our VIPs and speakers for the summit the next day. So I talked about, hosting radical conversation, and we're asking big questions. So we also talked about how hard challenges call for hard solutions. It doesn't mean we don't also ask ourselves the hard questions of whether we are being overly indulgent. Are we engineering well enough? And are we optimizing how we allocate our resources? So with that, thank you for bearing with me through that introduction. I wanted to take a quick break here to introduce you to my lovely panelists. Today I have with me Remy from Elevate VC in Singapore. I have Gabrielle from Main Sequence Ventures in Australia. I have Ritu from India, Anchor Capital, happens to be in Singapore right now. I have Yunmin with me as well from Sopung Ventures in South Korea. I'm going to hand it over to each of them to give a quick introduction of themselves. Please, you can feel free to go in this sequence. Remy, go.
Hi everyone, this is Remy from Elevate VC. So we are a early stage deep tech venture capital fund with a big focus on solving three of the biggest issues that we believe humanity is facing today. And those three are firstly climate change and energy transition, secondly food security, and thirdly to democratize access to healthcare. So the way we do that is to further split that down into the four sectors that the team is understands and has networks in. And those four are smart mobility, medical technologies, novel materials, and last but not least, what we call complex computing, which includes true AI, quantum computers, and stuff that bring forth, exponential changes to processing capability and decision making capabilities. So we are very early stage investors. Our typical check size is about 500K to $1 million, and we are very comfortable investing fresh out of university or fresh out of research institutions, startups that are pre-revenue, and our game is really to help bring deep tech startups to revenue.
Thanks for that, Remy. Gabrielle?
Thanks, Sin. Hi, everybody. So I'm Gabrielle from Main Sequence Ventures. We're an exclusively deep tech investing fund, and it's really all around the belief that the next generation of commercial giants are going to rise from the planetary challenges of today. So our big thematics are decarbonise the planet, feed 10 billion people, reach humanity-scale healthcare, bridge the gap to space, enable the next intelligence leap and supercharge industrial productivity. It's not a small to-do list, but luckily some of the other people on the panel as well are also working on these big challenges, and together we'll make some headway. We are actually set up within our National Science Agency, which is called the CSIRO. And we're a bit of an unusual beast because we live within the research ecosystem, but we're set up like a completely independent commercial venture fund, if you like. So we have all the freedoms to invest across the whole of the research ecosystem in Australia, which is about 50 or so publicly funded universities and research institutions. Our first couple of funds, we've now finished investing, and that represents about $500 million. We're just about to announce the third fund that we've raised, and we'll commence investing that shortly. And perhaps the other things to know about us, we also tend to be pretty early stage. So 2/3 of our initial checks are pre-seed and seed, and then we're usually gone at least 2 or 3 rounds following on into our companies. And we help bring a lot of our portfolio to life. So about 1/3 of our portfolio are companies that are either spin-outs from research or companies that we've created ourselves. And my big thematics personally are decarbonise the planet and feed 10 billion. They're sort of what I spend my time on, and a lot of synthetic biology investing. With that, I'll pass back to you, Sin.
Thank you. Rita, would you like to go?
Thank you, Sin, and super excited to be here on this panel. A little bit about us. We're an early stage venture capital fund based out of India, primarily investing in India. We actually are not completely a deep tech focused fund. We do both digital solutions and deep tech, but I'm going to talk about the deep tech stuff we do here on this panel. Again, just much like my other panelists, we are early stage, so we do pre-series A, so roughly between $500,000 to $2 million is what we can start with, depending on the company and sort of how the rounds are being constructed, and then reserve capital to be able to kind of follow on into our investments. From areas of interest, we're actually agnostic, but there are 3 thematic areas that I think we have invested in and will continue to invest behind. One is food and agriculture. It's pretty core to what we do. The other one is energy, and the third has been health. So, I think we've spoken about, the other panelists have also spoken about these areas, and these continue to be focus areas for us. So it's not, we're not tied to any or married to any technology per se, but we just want to see the disruptive solutions, and especially the disruptive solutions that can address some of these challenges in markets like Asia, which are very different compared to a market in the US. So specifically looking for some of those kind of innovations here. We also come in fairly early, though we will not fund R&D. We typically would like to come in at the technical commercialization phase and help the company through making revenues. So roughly that's the agenda here.
Thanks, Ritu. Yunmin.
Thank you for having me. So it's my pleasure to join this talk with these great panelists. So our company is called Sopung. Sopung literally means in Korean picnic, but it also means small win. So we believe small win can make big changes. We are also an early stage investor, but we are in the actually impact investment scene. So slightly different, but we actually also have tech companies in our portfolio. So we started in 2008, and when we define impact, we're using UN's SDG. So if we are fitting in any of these areas, we are actually actively investing in. But recently we raised a fund for climate tech. So with that fund, we started Go Global. So our primary market, of course, Korea, but also we are prioritizing Singapore and Vietnam and other Southeast Asian countries as our target markets. But we also actually, if you are in climate tech, we are open. So we recently invest in US company as well. And in terms of stage, just to clarify, so from pre-seed to A in Korea, but it depending on the country. So ticket size is from 100K to 500K. Thank you.
Thanks for that, Yunmin. So I just want to pick up on that because I think what we've come across so far is that there are actually a lot of overlapping themes, right? It seems like a lot of people have an interest in food security and healthcare and energy and decarbonization as well as climate. I'm just curious, what would each of your rationales have been for these domains of interest? Is it purely from how maybe significant these challenges are and how urgently we need to identify solutions? But I would also juxtapose that, right? Because just because these are great challenges does not mean that these are necessarily profitable ventures. And you guys are venture capital. Make sense of that for me. Anybody, please feel free.
I can start. So climate tech became one of the priorities for us. Actually, we started our company in 2008. So our focus area has been changing and evolving over time. So at the beginning, we did a lot of health and medtech as well. But now we realize the biggest problem that we're facing as an impact investor is a climate-related action. So we decided to prioritize this. But from our end, actually, when we say climate tech, it's not an industry thing because it covers all the industries. So we try to say it's as a theme. So we want to see this actually in different sectors and industries. And it's really big opportunity coming, but as an impact investor, we are actually quite patient in terms of getting returns. So, and then this area is actually, it's a long-term investment, but we believe it's really important and it's coming. So both actually, as an impact investor, we see this is a big impact, but we also see this can be a big business opportunity as well. And in Korea, there's huge push by the government like any other countries. So we see lots of opportunities, but also this is not only for Korea. So when we invest in the company in Korea, climate tech, we see they can go global, so they can grow together with us. So that's why I also start investing in global like startups as well. So both sides, impact and then the business.
Yeah, I mean, I think I can add to that. I think, Sin, to your point about, are they profitable? Our view would be more and more that the next generation, the biggest companies that will emerge on the planet are going to be those ones that address the worst of our planetary challenges. And so more and more that intersection rises as the most exciting opportunity set in many ways. And it used to be many years ago that there was, you had to trade one for the other. And I really think we've moved way past that, thank goodness, because of the urgency. And also the expectation, from our LPs, which is we absolutely have to deliver a commercial return, akin to any other venture capability. But at the same time, they're looking for, as a deep tech investor, we do, I think, have a certain responsibility to help catalyze and birth those companies that can have massive impact as well. I think the other piece is just also the particular strengths of the research ecosystem in each of our regions. And certainly a lot of our climate, so in our second fund, about half the portfolio would be tech under the thematic of decarbonisation. And that really speaks to the underlying strength of research in a whole lot of areas around ag, around energy transition and various other things. So it's also reflecting the country's strength. I'll pass to others to comment.
On the commercial piece, Jen, I don't think we'd invest if we didn't think that there was commercial viability, right? So, both for us as an investor and for the technology to actually make it out, I think one of our evaluation criteria is that what would it take? Like, what's the kind of time frame that it would take for this to get commercial? So I think what we sit on is high risk, right? But at the same time, I think typically these are very, very massive markets. And, of course you don't know, but whatever we could kind of sort of like at least put some logic behind to say, look, if A, B, and C were to happen, it could unlock such a large market, so the risk is worth it. So that's kind of. And to the other question about themes, so I think, there seems to be a theme running through the panel where everybody wants to have positive impact and not negative impact. So positive impact drives our choices for some of the themes that we're interested in. But in addition to that, so does what's happening in the market, right? So we can't say, hey, we want to do this, and there's no companies doing that. I think the only time that we've actually kind of stayed away from some deep tech investments are where they've been more, kind of defense focused or military focused, because that's not really our mandate or, what our LPs would like to be sort of kind of funding, because there is a lot of deep tech that does go into defense, and that's a no-go area for us. But other than that, we're open.
Yeah, so we actually started off as a pure, we still are a for-profit VC, and we started off this way. We still are. I think along the way, somewhere towards the end of Fund 1, we started realizing that the starting point for many of us within the team was the three big problems that I mentioned earlier that we absolutely need to solve. If not, humanity can't progress. And that's when we started really crystallizing our thoughts around how climate is going to be very important, how food security is important, and to democratize healthcare. And that has sort of morphed into what is essentially almost a guiding light of our strategy today, right? The idea behind that is that deep tech will bring forth exponential improvement in anything it touches. Now, if it's exponential improvement that is better for the world, excellent. And the area that we just need to be extremely careful about is, are we bringing exponential improvements into areas that we don't really want to see exponential changes? So that's where our starting point is. And then on top of that, we are in the right spot as a Singapore-based venture capital fund, where a lot of the areas that we are super interested in have been funded by the Singapore government via the Research, Innovation and Enterprise program for the last 20, 30 years. And we're talking about in excess of $50 billion in the last few years and in excess of $20 billion in the next few years. So there's plenty of opportunities on the ground here that's very strongly supported by the government. And then deal flows are coming as well because of the past $50 billion that we have spent building up technologies like that. So it's just a very strong melding of two big forces at play here.
Thanks for that, everybody. So I'm going to have like endless questions. And if anybody in the audience has questions, I would suggest that you pop them in the questions column so that I take your questions instead of just going full steam ahead. Okay. But I'm going to continue for a while more. We'll take the last 10 to 15 minutes to address your questions. Okay. Mine first. So we're going to go through this. A couple more. Bear with me. So I'm just really curious. I going a little bit off schedule here. That's also because a couple of you raised the point about LPs expecting certain things. can I trouble you to maybe give us a little bit more insight on that, right? And maybe taking it a step back, actually, because to invest in deep technologies is not something that's, well understood, especially on the side of like financial returns and what that really means, especially if you stacked it up against, more digital software type return profiles. And then for a lot of deep tech ventures, we're aware, right? The gestation periods are long. You have technology risk before you even talk about market risk. What has been the case that you would make to your LPs as to why these matter, and beyond just obviously the impact and how ambitious it is, the kinds of problems that they're trying to address. But what do you think your LPs have valued most about being able to put their money towards deep technologies?
I'm happy to kick off if that's useful. And our LP base, just for openness, is a combination of some large institutions, some corporates out of the US, quite a lot of family office capital, and then there's a long tail, of high net worth individuals, essentially. And in Australia, a little known fact about Australia is we have this massive pool of pension money because we have a mandated what's called the guaranteed superannuation system here. So it's like one of the 5 largest pools of money on the planet. It's about $3 trillion US, something like that. And so the largest of our pension funds are reasonably sophisticated, and they think of their peers globally as some of the largest pension funds. And so part of the answer to your question, I think, Sin, is that there's a level of sophistication around how they're thinking about ESG, and that we can be the part of their portfolio when they look multi-asset that can actually help move the dial and also provide the kind of narrative they want to be giving to their own, customer bases around what their capital is achieving in the world. It's also really important in terms of delivering the differentiation in their portfolios as well. And it's the place where they can, seek to, it might be a small allocation relative to what they're doing in listed asset classes, but nonetheless a place where they can, dare to back some of the things that might feel a bit more impossible. I think another piece is, if I look at the family office segment of our LPs, then particularly like younger generations in multi-generational family offices, younger generations coming through are very keen to deploy capital into in more impactful opportunities. So again, not necessarily at the expense of commercial returns, but also just this momentum in the belief that you can do both. So I think that's part of it. It's the differentiation. It's a level of sophistication globally around how institutions are looking at ESG and the impact they want to have with their capital. And that all sort of filters down for us in terms of how the value prop that we deliver to our LPs. Be fascinated to hear if any of that's true in other countries or if some of that's different.
So for us, it's not like, we said, okay, look, we're going to go do deep tech because we're not fully a deep tech fund. It is part of our strategy of what we're doing, and it sort of, came along, is what happened. So for us, they have to be commercially something that can be, commercially makes sense in a portfolio. And honestly, I haven't had the conversation that you are investing in deep tech and that's just putting money down the drain. It's been much more about, look, these are super large problems, right? As someone said earlier, that, if you are going to make it, there's very, very large commercial returns to be made at the end of it. I think the only question is that it's a journey, right? And there are risks, and we've invested in enough companies that sit with revenues, and let me tell you, just having revenues doesn't mean that it's not risky. So it's revenue to me, especially early revenues, is not an indicator of low risk necessarily, right? So I think the question is that the lengths of these journeys for full commercialization might be longer. But I think the discussion that we typically have is that, value creation is what we need to be talking about. And value creation could be like a relay race that you go on, right? As opposed to the marathon that you run. And so, you get to a point of de-risk stuff, you get your benefit of having de-risk that, moves on to the next person here who's taking on a different risk, right, than what you took on, and gets a reward for that risk if things work out. So, if you go down this chain, and there are some people who can do the whole chain, but everyone doesn't have to do it. And as long as there's value creation, there are returns to be made, as long as the markets are, of course, there's liquidity in the market, and the market is large enough for it, basically. So I don't think it's I actually don't think these are non-commercial investments. We've actually had some of the best returns from our deep tech investments.
That's a wonderful testimony to deep tech startup. So thank you for that, Rita, and you for sharing that piece. I was wondering, so moving along a little bit, would really like to contextualize what the opportunity spaces look like where you're at, right? How would you describe the view from where you stand? Where are funding gaps? Where do you see yourself being able to maybe leverage certain gaps that others are overlooking? What are you seeing as opportunities?
Yeah, so happy to take that first. So the way we look at the business of Elevate is that we go really in depth into the universities and the research institutions at the very early stage. And my ideal spot is before they are incorporated. So I would love to go into the labs of the researchers, talk to the PIs, find out what they are doing about 6 months before they are ready to spin out. And then making use of the Elevate network of corporate partners who are really, if you think about it, providing the demand for deep tech. So over here, I have the supply, and on the other hand, I have the demand. So I play this little bit of a middleman in between to then say, okay, that's this demand. You are doing really interesting stuff, but you might not know what the corporates are truly looking out for. And effectively being a connector at a very early stage where I then invest and I then be able to add that kind of value because I know who's going to buy your product at the end of the day. I know who's going to prescribe to you what the product should look like and what the solution should look like. And then at the end of the day, what really happens, and this touches a little bit on your earlier question as well, is how do we make money out of deep tech? Because the recurring theme, the question that we keep hearing is, it takes 10 years, 20 years to commercialize it. But if you find a way to shortcut processes like that, and obviously it's a lot of hard work to go so early into the research institutions and to go form that kind of network with the corporate partners. But if you do that and our entire strategy sort of revolves around that, then I think firstly there's money to be made, and there's that kind of opportunity for a sort of like a middleman that we invest in the founders, at the same time we provide great solutions for corporates. So that's how we look at the overall strategy.
Thanks, Remy. If I can just chime in there. So fellow Singaporean, again, very, very cognizant of how privileged we are that, research is very well funded in Singapore, right? Would like to hear from the others as well when research isn't as generously funded, or where you don't have as much access to grants or other forms of non-dilutive funding, and maybe even the quality of research could be questionable. How would you navigate that and try to identify actually what's worth investing in and what makes for good opportunities, especially if you have a very huge top of funnel and then just going through that? What would be your process?
I can speak. We actually don't do what Remy does. So we don't go into the university and find the interesting research. We need the entrepreneur. So we kind of want somebody who wants to build a company out of this. And honestly, actually, so while you may talk about how much money goes into research, I think it's also money needs to go into people thinking of translational research, right? Because to me, 95% of the people in the university don't want to commercialize what they want to publish a paper in Nature or something like that. They don't really, they're incentivized to do something different. So for us, I think the larger challenge is on the translational research piece of it, that, somebody wants to build $1 billion company out of this, right? The potential for the technology may sit, and there's a lot of entrepreneurs we have spoken to, and they've actually even set up the company. But setting up the company is not the same as putting the effort behind building $1 billion company. And so that forms a pretty serious part. And so, and in India, I mean, we do have research dollars. We're definitely not top research funders, etc. But I think the examples of the trickles from that to actually, full-fledged companies is something that we don't see enough of. So actually, we see more people jumping off, like, from, I don't know, commercial R&D or, things like that. So you see, or partnerships that sort of come up. Yeah.
So maybe for contrast, like Remy, we do stalk the corridors of our research system. I like to call it sort of truffle nose, sniffing around for what's happening on the inside, and like to meet researchers and have one-on-one relationships way ahead of time, like say months or even years, perhaps. At the same time, acknowledging what Ritu said about not everybody is, wants to be on that entrepreneurial pathway. But we do sniff around, and it's either for spin-outs where a technical founder does actually want to create a company, or indeed where we might create a company ourselves if we find amazing research that we can bring the commercial people into. The grant side is interesting. I think one of the things that's changed, certainly this neck of the woods in the last year or two, is an appetite to build sovereign capability in certain deep tech oriented, areas, essentially for the government to very deliberately birth new industries that it wants to have a sovereign capability in. And I suspect that is true in many other countries. So what that has meant in practical terms is a lot more non-dilutive funding at the very, very beginning of the funnel. So when something is essentially funding research, there's about in US equivalent terms, there'd be about $1 billion, a recent announcement about $1 billion of commitment to doing that. And that's great, because the more non-dilutive we can get into sort of, again, fuel that activity of research that can have translational, that's the key thing, as Ritu said, translational, something that can actually be commercialized. And it is dedicated to that. And then the other piece is, and again, I don't know if you guys have had similar, in the last year, our government announced what they're calling the National Reconstruction Fund, which in US dollars is about a $10 billion fund. And that's expressly for scale up of deep tech industries, again, that the government wants to create a sovereign capability. And so that's a long way of saying that the non-dilutive funding environment is a lot more, has a lot more momentum here than was previously the case. And I think it's a response to geopolitics and a whole lot of other very big global macro factors that are creating an appetite for sovereign capability in a number of the areas in which we're all, focusing.
Just to share about Korea. So in general, the deep tech, I think the investors going to university for sure to find PhDs, but also we see a lot of trends coming from the big corporations. They actually have some system to cultivate internal startups within their company, and they give some opportunity that they can either spin off or come back to their own team. So we see lots of happening, and I recently met like a few from Samsung or POSCO, which is one of the big companies in Korea. So I think that's a really good way to find great talent in deep tech to come out of the company, corporate world, and then they start their journey. For climate tech itself, actually, it's really early for us. Actually, Asia or Korea is far behind than European countries or America. So what we did, actually, we did a fellowship program. So we work with researchers directly and try to find entrepreneurial researchers to start their businesses. Some of you mentioned, so it's different. So if you want to come to this journey, we want to help them to build a company from the scratch.
Thank you all so much. Oh, please.
Just one more. There are lots of R&D projects by the government as well in Korea. So the company can actually survive with the grant from the government, but that's not ideal. So they need to make money. So we try to help them to be more profitable.
Thank you. So I think we're a bit overdue to address this. Everywhere in the world, you just keep reading about like inflation and interest rates, all these nasty macroeconomic terms, and everyone talks about valuations getting halved. We talk about difficulty even raising money. We have venture capital that doesn't want to allocate so much to new deals because they need to conserve for the existing portfolio companies. What's it been like here, geographically, as well as for deep tech? What are your thoughts?
I'm happy to kick off. I think, and we were discussing a little bit earlier, definitely in terms of the general market tone overall across the board, multi-stage is a lot more sober. Having said that, I think a lot of us, have had the same experience where, because we're early stage deep tech oriented, we never saw the heights the other markets saw, particularly the US through COVID, and therefore we haven't had the same sort of dramatic drop. And that's probably by virtue of the fact that being in these more far-flung places geographically, no one's sort of paying much attention to what we're doing at pre-seed and seed stages. And so it's mostly locally funded at those times. There hasn't been a lot of competition for deals. I don't know about you guys. It is so rare that we see any competition when we're going in at pre-seed and seed. And so we've been somewhat buffered, I guess, from what's happening in the market in terms of the early stage deployment. Where we certainly see it more is as our companies have matured into Series B, Series C stage, and they're raising those rounds where they're necessarily going offshore for capital as well. And certainly, yeah, as I said, the market is a lot less frothy than it has been the last few years. And as you say, I think a lot of venture managers, particularly the US, is what we're constantly hearing is, the most challenging environment, sort of batten down the hatches, sort of protect the existing portfolio, make sure that they're, reserving enough for follow-on rounds of existing companies. And therefore, as you say, deployment into new deal flow has dramatically, I think, the stats sort of 50-60% off for the year. So that's, I think, where we see it playing out. The one last comment I would make, though, because I think it's pertinent for this cohort, is we do see a decoupling in climate tech, and definitely have many examples in our portfolio where our climate-oriented companies in scaling mode are still managing to achieve very good vals, raising B and C rounds. So it has felt to us, at least for the last few months, that the climate tech space specifically, probably by virtue of just the weight of money sitting behind, large impact funds, very large, climate funds out of the US, for example, that's been a bit of a case apart, and probably some of the better, it's probably the better performing part of our portfolio. Yeah.
Shin, for us, it's been a funding winter for deep tech startups for a long time. So it just continues. The only thing I can say is that there's a funding winter for other, tech-led startups here that may make this slightly or at least let's take a look at this part of the world kind of thing is what we see. But, the hype was just not there to go away. This was a situation in the last 2 years as well.
Yeah, it feels like because we never really saw, that uplift, that we also never suffered the fall. Okay, so I'm gonna move on, because now I'd really like to hear from you then what it's like, seeking follow-on funding then for your portfolio companies, right? Because while all of you invest in early stage, we've talked about also and addressed that it's the later stage startups that are suffering from that negative sentiment that's acting as a dark cloud. What's it looking like when you're trying to help your companies to access not only new funding, but also maybe new markets, because you want to be able to test for traction further down the road? What's that looking like?
So in the Singapore context, what the government has done is to very smartly interject money into every single part of that value chain, from spin-off at the earliest stages to the accelerators to early stage investors like ourselves. So just to add some color, how they work with early stage investors like ourselves is to appoint investment partners that they have vetted, and effectively, any deal that we invest in, as long as they're Singapore-based and deep tech, there's a green lane where the government will co-invest alongside us, sometimes more than how much we invest in, right? And then they have later stage funds, and you have larger funds like the Economic Development Board Investments as a fund. You have Temasek that everybody knows about, and then Temasek itself has got a few other funds that specializes in different things and different areas and different stages as well. So then, depending on what's necessary, they say, all right, we're going to push this lever here, push that button here, and things sort of even themselves out depending on where that gap is. So right now, I feel that gap seems to be closer towards post-Series A as opposed to pre-Series A. And we are starting to see quite a bit of monies being channeled into that space right now. So I would say the government tends to do pretty well in soaking up what is necessary in order to keep this pipeline of venture funding for deep tech startups moving. So yeah, that's that Singapore context.
Thanks, Remy. If anybody else wants to go. Okay, otherwise I'll move on. I wanted to be able to take some audience questions because there have been a couple of fun ones. First one, we have, how do you evaluate opportunities in Southeast Asia? What's your view of the market here, especially in areas where deep tech and impact intersect, which is pretty much what everybody here on the panel seems to be looking at? Are you seeing any interesting trends or opportunities? Would like to hear from you also, maybe your thoughts on how you think your evaluation metrics might be different when evaluating startups from other parts of the world. Open to anybody.
I can go. It's just not different, right? I mean, we need the technology to be world class. If we're looking at a very large market, it just can't be different as to how we evaluate that. I think what is perhaps interesting, and from where I sit, and I'm sitting in India, not Southeast Asia, is that many times a lot of these are fairly capital efficient given the nature of the market that we sit in. But the value prop for the change that the technology is looking to drive has to be high, has to be well protected, has to access large markets, and has to compete with. And the one thing I say about deep tech, it's because it's not an execution risk that you're taking to start with, right? It's a technology risk, and technology can be developed anywhere. So it has to compete with the best of the best. So for us, I don't think the evaluation criteria is any different. Every time we look at a company, we talk to people in adjacent technologies globally before we would even touch it. So it's not different.
I agree in that. I mean, Australia is such a small country. We've got the populations of 25 million. Every company has to be global from day one. That has to be the orientation. So as Ritu says, the tech has to stack globally as competitive and capable of creating a big, fat moat to protect the value of the business. I think maybe the one piece I could add in terms of that question of what's different about evaluating opportunities in this part of the world, we're certainly, looking to play to our strengths. So Australia is sort of known as the food bowl of the region. So food and ag is an obvious, space to be in. For our strength in mining, what comes from that is a lot of expertise in industrial tech, robotics, these sorts of things. So I guess it's just looking hard at the industries where over some decades, certain skills have been developed, or indeed because of kind of like what Remy was saying, maybe because of the government funneling a whole lot of capital into a certain space, a community of expertise has developed around it. So that would be the case for us in quantum, for example, where by virtue of a whole lot of funding going into that area some decades ago, there's actually a very large community of quantum physicists in Australia. I really believe, like what Ritu said, that you can develop the best of the technologies anywhere. It's little known that Wi-Fi was discovered in Australia, very randomly. And I don't doubt there'd be a whole lot of surprising things from Korea and India and Singapore that I wouldn't be aware of. So it's sort of, I think, for us about making sure the technology is globally translatable and competitive, and then coming back to where if you need to reach that, if that's the bar, then where are your strengths? Play to your strengths.
Thank you. Okay, I'm going to move on to the next one. This one was specifically for Ritu. I recently heard that there are more SynBio startups in Bangalore than in the Bay Area. Are there more startups in India in this space? And what's the reason for this sudden spike, and what's your sentiment?
Oh, I'm not sure I would agree with that statement, but yes, there's a whole bunch of people looking at SynBio, and I think somewhere, to what Gabrielle said about like sort of this being playing to strengths, there's a lot of biotech stuff, and there's a lot of funding behind biotech in India, and from the computational side, I think we've always had people kind of interested in computational side, so perhaps some bit of sort of marriage of the two with having had some kind of generic pharma industry, etc., is probably helpful, even from like setting up plants and that kind of skill set to actually develop that. So yes, I think we are seeing more of those coming out, and I personally feel that we will continue to see more of those kind of coming out. Are they more than the Bay Area? I don't know. With zip code, I don't know. We're comparing to that.
Thanks, Ritu. Okay, so I think this is a great way for us to wrap up as well. So the whole objective of this panel is how do we help build more opportunities and bridges for collaboration between whether it's within all the Asia Pacific countries or from APAC to the rest of the world, right? So what are your thoughts of what it's like? What have been your experiences, perhaps, of cross-border collaborations? What's your stance on it? Do you welcome it? What are you excited for?
We are always happy to work together. So we actually, as a Korean investor, we just started going global, and we actively going to Vietnam and Singapore. And then whenever we meet VCs and startups and accelerators, they're all willing to help support each other. And of course, and we also. So, and then there are, as you mentioned, like technology can start from anywhere in the world. And I'm happy to also collaborate with any VCs, any startups, and also happy to support them to come to Korea, because I feel in our conversation previously, I feel like Korea may be high quality, but less valuation. So I think there are more opportunity for you guys to come over. So I think welcome.
So I'll give it back to the next person who wants to address that, but maybe just to contextualize this, right? So for the benefit of the audience, when we were chatting internally among ourselves earlier on, we were going through, what a typical seed round kind of looks like in each of these countries, right? So we had in Australia was indicatively about $2 million seed rounds. In India, it was 1 to 3 million, and Singapore 2 to 4 million, and in Korea it was like kind of touching 1 million.
Right.
So those are the sizes of the seed rounds. If that's anything that's reflective of maybe how much it costs or the capital intensities needed for seed stage deep tech startups, that's a point to note.
I would add that Yuman said there's 5x of non-dilutive alongside that. So that's super critical. So that's really nice. I wish we had that 5x. So, I'm sure a lot of startups will be super excited about that.
Absolutely. But yeah, so to anybody else who would like to, take that point about cross-border collaborations, or even local market access for potential like foreign portfolio companies that you're considering with a very keen eye to your local market. Sorry, Gabrielle, cut you off, please.
Yeah, no, not at all. I was just going to say it's vital, the cross-border collaboration. So typical pathway for our company is we're the first check-in, we're leading the round, we're probably sole investor at seed and pre-seed, but then come the A and the B, mostly our co-investors are large offshore funds, largely out of the US, but we would love to, to do more work in other regions. We do have some very good co-investors out of Asia, less so out of Europe, funnily enough. So it's a really important piece, and for us, it's not just the check; it's also all of the strategic ways that those investors are opening new markets and creating networks for our founders, and just smoothing the pathway, if you like, into stepping offshore. Because probably by around the late Series A, early Series B stage, I'd say most of our portfolio already have a US presence, if indeed they haven't relocated their headquarters to the US. So those investors coming in at the later stage rounds provide that critical, if you like, pathway into those markets. And then in terms of welcoming, founders to the country, I think where we play a useful role can be around identifying, research expertise that they can connect with to actually, bulk up the IP in their companies. And that often tends to be the case when we make investments offshore, which have mostly been in the US to date, again, but it would be interesting to look at other geographies. It's where we can find a research expertise in Australia that will genuinely inject advantage into that company. We make the research link, and then we'll invest on the back of that.
So for us, Singapore has always been a melting pot. So we have been co-investing with investors from all over the world for a very long time. Having said that, because we are based in Singapore and the requirements of deep tech, we lead a majority of the Singapore-based rounds that we participated in. In fact, close to 100% as of today. And one of the areas that we are looking into and we love to expand a lot more is how do we work with the corporates directly, who may invest out of their balance sheet or who may invest out of an innovation arm or a CVC arm. One thing that we have seen is that they add a lot more value, because the requirement of a Singapore-based startup, deep tech or otherwise, is you need to see global market from day one. We are even smaller than Australia, right? So the is necessary, is a survival. It's not a good to have, and you can stay alive if you just do the Singapore market. It just becomes a necessity. So that's one of the areas that we are working on. Elevate is working on a lot. From a government support perspective, you get a lot of literature out there. But we have the Global Innovation Alliance program, which basically has offices in pretty much most of the deep tech hubs or venture hubs around the world. We have bilateral agreements with a lot going on in Australia as of today, especially. So that's where Singapore's power actually lies, just being that hub that brings you all over the world, and also being able to bring both investors and startups to Singapore.
I think from where I sit, this is just so hard, right? I mean, it's not like you have a lot of global investors scouting the India market for deep tech startups. I'd actually, echo what Remy said. Love to see more global, corporates or whatever companies that have interest of partnerships of how to, take these to different markets. And that's why I think Hello Tomorrow is a super exciting platform. So, to be able to be bringing, as I said earlier, technology couldn't care less about political boundaries or geographies at the end of the day. And so, and given the long, tough journeys it's imperative that it commercialize as fast as possible in whichever geography is willing to sort of accept that. So, bringing the global ecosystem together, and especially given that all of us here are looking at some very pressing problems, is actually a very critical thing, that both investments and partnerships can get formed for, global scale for the solutions.
Thank you for that, Ritu. So I'm just noticing we have 2 minutes. I know Gabrielle will have to run, so I won't let this run over time. And thank you, Ritu, for that point. So I'd just like to wrap up and firstly thank all of our panelists today. I want to remind everybody that, maybe just a point that why Hello Tomorrow exists is really just to help startups, deep tech startups from wherever it is in the world they sit or from where they operate, to really just expand that playing field for them and to help them to amass opportunities wherever that's from. We operate geographically agnostically. The whole idea is how do we help tear down those arbitrary boundaries that we call countries and borders, and really be able to help all of these startups, funding, industry access. How do we help facilitate a lot more connection and collaboration across these boundaries and across parties? I wanted to maybe take this point to wrap up again on the 4th and 5th of October. Again, we'll be hosting our Investor Day in Singapore. If you have startups or if you are a startup and you'd really like to meet some regional and international investors, this is a great opportunity for investors likewise to meet fellow investors, as well as brand new startups that you might not have, that might never have crossed your radar. Again, I echo Rizu's point that technology is geographically agnostic. They're just going to have to work wherever it is. And on the 5th of October, we'll wrap up with a wonderful summit. Again, we're going to have good fun with some crazy conversations. So join us then. Again, I thank my panelists, Gabrielle, Ritu, Yunmin, Remy. Thank you all so much for spending your time with us today. We hope to see you soon.